Okay, groovy music. Hey everyone, I'm Guillaume. I'm here with Rosalie, aka the Crypto Queen. We skip Monday's show, but this is Stop Losing, Start Trading, the live trading show where I teach Rosalie how to be a better options trader. She used to come from the meme coin trading world. We started to lose on these meme coins going down the hole. So we're trying to convert her to being an options trader. She's doing great. We've had a lot of success. This is us picking up the portfolio from last week. Nothing we say is financial advice, but this is definitely something that could be used as entertainment or information if you want to trade. This is on Panoptic, but what we say here is usable for any options trading platform. And yeah, looking forward to today's episode. How are you doing first of all, Rosalie, today?
Good, good. Yeah, I enjoyed Memorial Day weekend. I wasn't too sure about what will happen over the weekend, but I think nothing too drastic happened. I
But
think there
nice
was a
weather
tariff
too.
announcement, but I don't think it really
It's like
shifted
doesn't even
crypto.
move the needle. We've seen so many threats and pullbacks that now probably the market knows. The one, the scary time was when Trump didn't seem to be serious and seemed to be like that 10% across the board made the markets freak out. But now I think since he pulled back and walked back those statements, it seems like no one cares. So nothing happened over the weekend. But yeah, nice weather. I also spent a lot of time outside. This was
Yeah,
pretty
I was at
cool.
the beach. It was nice.
Really?
I got sunburned though.
It felt your skin tone seems very prone to sunburns.
Yeah, I
Yes,
don't tan. I usually just stay inside, but if I do go outside, it's all
I had a
good.
few. Like I'm also always careful, but yeah, sunburn sucks. It was a bit colder, I guess. I would not have gone to the beach at least from Boston because it was still cold-ish, like high 70s, low 80s. Seems fine, but yeah, at the beach was a bit too cold for us. But yeah, I'm looking forward to go to the beach too.
It's very warm in New York. If it's like 70 degrees here, it's already too warm. So maybe Boston has more wind.
Yeah. All right. Very cool. So today we'll get it started with again going over the markets, going over the intern portfolio. So what we discuss trades, and the intern sometimes listens to us, sometimes not, but we try to nudge him or them in the right direction. Rosie has had some pretty good insights and kind of trades, and they've been going well. We have to now salvage some of the trades, and then there's one that in particular we'll look at. But yeah, first let's go to the markets. Um, Markets are sideways, which is fine. We like this when it's sideways. What we've seen over the past week is that staying in that range of ETH being between I don't know 2,500 and 26 or 2,700 back and forth is good for the market because we are an option seller, so we want to harvest that volatility. And again, this is also the title of the show. You have to be when you're non-directional, like you can be wrong a lot of times. Prices do move. But if you're non-directional, you want to see some churn. You want to see some back and forth action. You love when it's going this way, like we have, because you're making fees, making money on the way back and forth. Last month did see a huge move, so ETH price went up, the ratio went up as well. That's where we got hurt on the price move. But since then, everything was stable, so that it's a nice environment to be in. Again, people that are holding hate this sideways market, but as option sellers, we harvest vol and we like it. So any opinion on the ETH price action? Also, are you looking at the chart? So it seems it's not moving so much. So yeah, there's not much more to do.
Yeah, not much more to do. I am curious about harvesting volatility a bit more, though, because it seems like when delta neutral strategies, they don't seem to make like as much, and maybe there are different ways, and maybe shorter time scales, or yeah, kind of to figure out how to profit a bit more off of
Yeah,
this.
it's all about trade-offs. The delta neutrality, you can be neutral over a year, and this is a totally different strategy than neutral over a day. And the trade-off is that being over a year means that you don't have to worry about it. It's going to be a very slow, lot of inertia, and you'll make less returns. If it's over a day, boom, it's done within a day. You're right or wrong, but you'll get a lot more money or a lot more premium within that 1 day period. The interface and what we're trading is mostly monthly options because we do this show a few times a week. So we don't manage or day trade that much. It's monthly options. This is a happy medium, and maybe it's worth looking at some returns, but you don't do 1000x or even 100x or even 10x as an option seller, and it should be fine because you don't lose 100x of your capital. So the trade-off is that you may get at risk. And I would say we could do some back of the envelope, but between 40% APY, 50, 60% APY is what you expect on the monthly timescale, which is kind of much better than and it's non-directional, so you're kind of hedging a risk, but it's much better than the stable coin returns you can get. There is some level of work involved, but it is by design more risk, more reward. You should expect 50% plus APY. And we don't advertise this too much because it's a bit misleading because you have the management or hedging costs, but just pure premium is definitely on the kind of high side. So let's jump right into one position that we have here. Again, the interns portfolio has many markets, many positions. We don't want to overwhelm the listeners and also even the traders, but this is one position that is kind of working for us, and we can do the back of the envelope of the returns. But yes, in that case, since you're very experienced, maybe tell us what this position is and what's the current state of that market.
Yeah, so this is a short put that we opened on Friday, I believe. Yeah, so we're still in range. We're making some fees, and we're also kind of profiting off the upward price change. And yeah, we have a nice spread as well. It's
Yeah,
looking
so
good.
this is, we look at a curve, it's a bullish trade. So selling a put options is bullish. We set it up kind of in a in the money, or at least out of the money, but we set up with a relatively low delta. I think the delta was 30.
60,
Yeah, so price went up.
30,
It went
yeah.
the way we wanted. We are earning 11% in 8 days. So again, this is directional. So we have this directionality, but 11% in 8 days, you times 50-ish if you want. That's 500%. It's unrealistic to keep going, but this is kind of the raw returns you get by being directional and being right. If you're directional and wrong, you could lose 10% in a day as well. But that's one aspect. Being directional allows you to get quite a bit of returns. One thing that's interesting is that it's 10% in total profits, and it's $32 on that position size. $14 out of that comes from the premium that you're collecting. So have that 5% in 8 days is what you collect on the premium side. And this is also where on the sell side, harvesting volatility, it's also pretty juicy. 5% in a week. And this is probably has worked for us quite well. More than 100% APY. And the trade-off is that yes, we'll make a lot of money from the capital that we deploy, but we have potential a lot of risks on the downside. But just from that pure volatility harvesting, it's actually pretty capital efficient and pretty high returns. And in that case, we control $1,000 worth of capital. We only need about $300, which is a third of that of collateral, or even a quarter, $1,200 to $300. So overall, it is pretty capital efficient. It's in that case about 4x leverage, and we collect fees, and then you can see it's collecting every block up to the right. It's always going up because we're selling. So we are kind of annualizing it, means it's a high return on investment, but within 8 days, again, that return in 8 days is actually pretty good. So you take some risks on the downside, but the benefits that you get paid premium, and if you're right direction, you're also going to make more money.
Yeah, this looks great. I think, was this a monthly option or a weekly option? Because regardless, I think because we're getting kind of close to hitting or the end of our slope, might make sense to close this sooner
Yeah,
than,
exactly.
than
So this
later.
is a directional bet. We had a monthly time scale. 1 week into it, hit has worked. I guess maybe like not perfectly where we expect the price to go above 2,900, but it did go up from 24, 25 to 26. So it did go up. In 8 short days, we have a nice profit, more than enough to cover the gas fees given like the price. So we could close it, because if we're still bullish, then the juice left is very, very small, as you say. It's in the flat part. So the delta goes down, the returns kind of, if it goes up, there's less. Like most of it comes from that initial price. So it would be some position that if we were to be still bullish, I would close, roll the put up, which is something that a lot of people do in TradFi, which is rolling the options closer to a delta that you like, which is could be maybe 30 delta. And yeah, we could certainly do that. If you're neutral or bearish, or you have a different assumption, then it changes the trade. But yeah, this one is definitely one that worked for us. Nice little return in 8 days. Could be one we close right away. So yeah, are you still bullish on the monthly time scale for ETH? Which is a lot of what,
Yeah.
again, the starting point is, are you bullish, bearish, neutral on the asset? If you're still bullish, we can just set up a new trade that is also bullish. Yeah. All right, let's go to trade tab right away then.
Yeah, I think so. I think it's time for eight to shine.
Okay, very bullish. And from the interface, it's as simple as choosing out of these bullish strategies. We haven't done this in a while, so we have 4 strategies: long call, short put, long put spread. This might be a lot for people, but what would you gravitate toward if you're bullish, knowing what you know about option trading?
Right now, I would go with probably like, but I don't want to buy an option. Yeah, I don't know, maybe like a long call, because you never know. So we'll have to make sure that we somehow manage the downside as well. But I
Yeah,
do
so the
feel
long
bullish.
call is definitely one option that you are tapping to potentially a lot of potential returns. If the price goes to 4,000, oh my God, you make quite a bit of return on your investment, and the losses are capped on the downside. So if you're fairly confident it's going to go only up, buying an option is great. You'll pay a premium, but that premium could still be manageable given your assumptions. So buying a call option, we haven't done this a lot these during the trading, but that's one that is definitely, I've tweeted a bit about this, but definitely a good type of trade. There's a lot of liquidity actually in these trades. So there's sneak peek. We're gonna have the open options chain here. We can go to open interest. There's I don't know. There's $80,000 here, or 2060. So we have 100K of liquidity. So there's a lot of liquidity. Some people have been showing up on the sell side. So we could reasonably buy an option, and being the small fish that we are, not impact the multiplier too much, and still pay kind of the floor price. And maybe, yeah, maybe I'm interested in trying that. So would you? We can drag around and choose different strikes. But for instance, this is an option that is out of the money. If you're very confident it goes to 5K, this could be a good bet. But yeah, would you trade that, or you would be close to the money maybe?
No, definitely not. I think I would just want to capitalize on a move closer to 2,800 or
Yeah.
29. I don't know that it'll go above 3K.
Yeah. So
Honestly. But I want
depending
it
on the
to.
strike, we do show the break-even point. This is a monthly option, so we estimate the premium you would pay. But if you assume that it's a monthly option, price stays there, your break-even point for this one would be actually 2,900. So if your target is 2,900, you have a month for it to realize. But if you hit 2,900 before that 1 month timeline, you would be kind of in the profit zone right away. So you could buy the 2581 call with the expected premium. Your after a month, your break even is 2,900. But if it moves earlier, that's another way to earn fees. To earn profits. You want to try it out? Buy a call option.
Mm, mm. No, I don't know. I think when I'm not that. I think it'll take a little. I think it needed to be kind of
Oh, okay. So
lower.
there's a little bit. You mean the strike lower?
Yeah, the
Yeah.
lower
So there's a
strike.
little bit
Yeah.
less liquidity on the lower end side. You can buy this one. So the delta is yeah. Actually, let's go back. This is the one trade that we narrow down. Maybe 2900 is the break-even point. It has a delta of 57. So for those that don't know about delta, like how do you interpret delta in that trade setup?
That it's 50-50. So basically, you yeah, you have 50% of being right or 50% of being wrong, and so yeah, I don't
Yeah,
know.
the
It seems a
delta
little
gives you the
loosey
chance of
goosey.
being again in the money or right in this case. The delta is very low here, so this is 16 delta. So this is a 16% chance of making the most money, and that's kind of it's going to be cheap to buy, but low probability of profit, which is 16%. This one is 57%, so 57% chance of being in the profit zone. 57, more than 50, it actually sounds good, but you will pay for that. And if you're wrong, you can kind of lose your money. So that's kind of the trade off. And if you move all the way down here, you can be 85, 86% chance of being right, but the costs would be higher. So it's all about trade offs. Um, you said that you may want to see a higher probability of profit or lower probability of profit.
Higher probability of profit at a lower
Okay.
strike price. But
So in that case, you can even buy, and let's see, the 2300 strike price. We haven't seen 2300 in months, it seems, or maybe not, but that could be a good point. It is slightly less liquid. You may be paying more than this one has a 1.07, so 7% more than the fees on Uniswap. But if you're bullish, you're right into that high delta zone, which is going to be earning almost, like in that case, you earn 80 cents on a dollar move. And the more it moves, the more you make. So again, the price action that you expect, if you're very bullish, we could buy this call option. That makes sense. Yeah. Okay,
yeah,
let's do it. So we can share this in the chat of YouTube. Again, if you listen to YouTube, oh, okay, I cannot tape it. No, okay, I'll tape it somewhere. So I'm trying it. I'm taping it. I'm pasting it in Restream. All right, I cannot show this either, but it's a trade. It's as simple as sharing the URL, and anyone can trade this. Yeah, call option. We haven't done a lot of those, but this is an interesting one that we'll see if Intern does. Let's go back to the portfolio, which is going to be kind of what the other positions that we've created. So we are now buying an option on ETH USDC. I skipped this. The whole portfolio seems to be down a little bit, which is sad because if you look at all the positions, most of them are kind of neutral or making money. Is that one position, ETH BTC, that is the net loser. That is where the losses come from. So again, this is the interns portfolio, 5 markets, 5 deposits in different markets. Each one of them is mostly on the sell side and somewhat delta neutral. This is Eigen, the one that makes us the most money. We get paid with no one buying it. It's been 46 days into a monthly option, but it's actually working for us. I think the profits are great, and there's not much more to do. So I would also keep them on. The one that is $55 on Eigen, which is great. Unfortunately, we lose a little bit on the ETH BTC, and this is the one that is losing the most. This is the one that we created before a month
oh
ago.
wow.
Yes. Can you walk us through what you see here on that position?
Yeah, I mean, the first thing, we're out of range on both legs and losing exponentially. But yeah, I guess it moved a little bit out of range quickly.
Yeah,
Maybe we should have
this is the ratio
chosen more the
trade,
range.
and I don't know why we didn't manage it last time, but this has been in the money ever since that huge price move. This is the ratio price. The price hasn't moved much, but yes, it is a short ETH position on that ETH BTC ratio. So it's slope of -1. If the ratio goes up, you lose on the BTC ETH ratio. I also agree we should close this down, and then it's fine. We did earn some premium. This compensated for some of the risk we've taken on, but yes, definitely since the huge bull run, we're earning zero fees, getting a lot of exposure. This is really a bad trade. Again, this happens. We want to bang on a lot of successful trades, which is what Rudy has done. Like about like 5 or 6 worked for us. This one lost us. Uh, could have wiped some of the profits. Ideally, you want to be able to manage this earlier and kind of not lose opportunity here, but that's fine. It's part of the deal. So this is the delta neutral trade. Yeah.
For the ratio trades, are we able to look at how our deposits affect this
Yes,
as well?
exactly. So this is one position is a straddle delta neutral when we set it up a bit short delta, but that's fine. We can go on the market info page here, and yes, we have the deposits. So Intern has some ETH, has some BTC deposited, and this is the payoff of that position. But we can also include the deposits. In that case, okay. We're still sometimes the deposits helps us. So in that case, if we had a lot of ETH deposits, that could compensate for this. But yeah, here we are barely out of that. So we don't lose money in a weird way. The ratio went up, so we had a bunch of ETH, so it went up as well. But yes, I would say that this is also one where even though we have some deposits, uh, it might be a net loser if the ratio keeps going up. So again, the single position picture tells us that we're maybe losing money, but if you look at the collateral, we're still in the green. We have the risk analysis tab here that allows us to look at where do we get liquidated. In that case, the price has to go up by a factor of 3 to get liquidated, or a factor of 4, or even 4 to get liquidated on the downside. So we're far from being liquidated. However, we're very close to losing money given the deposits were included. So yes, I would say this is definitely one of those where we should have to close that position, eat that loss, unfortunately, and then kind of redeploy. So
Sounds good. Yeah, I think on Friday we did talk about another ratio trade as well. I don't remember if it was bullish or bearish,
let's
but
set one up and then we'll see. So this is the ratio trade. We can see the price, which is definitely where it was down for the past months. Huge bull run on ETH. A whale, I guess, sold some Bitcoin, bought ETH. I guess that's why the ratio went up. Now it's been stable. So what would be your assumption? Are you bullish, bearish, neutral the ratio?
probably more neutral. I feel like it might drop a little bit and kind of go back up depending on. Yeah, it's always either ETH or BTC since BTC kind of just moved. I'm not sure that I expect another big move anytime soon.
Yeah. So
But
yeah, that's right. The BTC, like, it's a ratio. Do you think it's hard to think sometimes in the ratio like framework? But yeah, do you think ETH is gonna outperform BTC, or BTC will continue to outperform, which is kind of that trade. So even though we might be bearish on the ratio, it just means that maybe the Bitcoin price is so large and so unstable, but it leaves kind of ETH and all the other coins in the dust. So yes, in that case, it's been pretty stable. You said you might be neutral because it's hard to know up or down. Don't quite know.
yeah, I do think BTC will outperform ETH, but would like to have a little bit more
Yeah.
neutrality
Okay. So in
in
that
that.
case, we can go to strategies. Uh, this is one market that has some options sold, but it's hard to buy. I'd say so. I would also advocate from selling options. In that, oh yeah, I think that's it. Yeah, we had a trade that was tapping into some of this, but yeah. Oh,
On Friday, I guess intern didn't
oh, maybe
listen.
they got forced. No, probably didn't get forced. Anyways, that's fine. So we can. That might be this one. It's a repeat, maybe. But this is a straddle, put in a call, sold. They're a bit offset. But it's still pretty close. It could be called a strangle or straddle, but this is puts and a call getting sold. You have risks on both sides, which may seem scary, but you have twice the funds, 2x capital efficiency because you have a put and a call in the same place. It's a bit bearish because the slope here is negative, so you have a profit that is max profit when it's lower, when the price goes down. That might be kind of, you said, a bit more neutral, but still bearish, because if the price goes down by 10%, then you're max profit. And if you don't think it's going to go up, you'll stay in that range. It's still going to make money. And that's kind of one way to understand this position. Neutral in nature, but because it's offset from the current price, you still have a bearish outlook on the price. And I chose these two strikes also, like, and then you know about this as well. Yeah. Why do you think I chose the 0.21 and 0.23 strikes for the puts and the call?
Yeah, so that we get a little bit of a multiplier on our Streamia that we
Exactly. So this is the if you click on it, you see the liquidity, but this is the chunk or bar of liquidity for this put option. Part of it is kind of hollowed out or removed. The way this works is that if you sell an option, you provide liquidity on Uniswap. If you buy an option, you short or remove liquidity. We still keep track of everything, but the buyer, the person that purchased that option, will pay you more than the fees on Uniswap. In that case, they pay you 14% more on the put side. And this one also has a buyer, which is now paying you 10% more on the call side. So remember, this is a LP position in Uniswap, but because it has this extra influx of funds from the buy side, you earn about 12% more in fees, which could be what makes the difference between a net loser on Uniswap and now a net winner on Panoptic.
Yes, my favorite.
Yes, in that case also, let me I'll send this directly to Intern, because I do think this was the trade we had created, and unfortunately Intern was not listening to at the show. So that's another trade that I also would even personally do, because taps into the capital efficiency of a straddle and also earns more fees because of that multiplier. Yeah. So that would be also where we close this losing trade and create this new one. Still at the monthly time scale, easier to manage. This is what the bulk liquidity is as well. But yeah, that's a very fine trade for sure.
That sounds good. Yeah, I think after we kind of had to reposition ourselves last week, this looks better.
Perfect. So I think, yeah, so we opened a new trade we closed a trade on E2SDC because it was in the profit zone and working for us. This is great. Open a new trade that is still bullish, but now buying a call as opposed to a put. So this is kind of two strategies where if you're bullish, you can sell a put, buy a call. In that case, we close a put, sell it, buy a call. That's very good. In the BTC ratio, we are tapping into this higher revenue stream coming from that buying activity. Again, the Uniswap LPs receive fees based on real trades, and if you increase the fees, there's less trade order flow. It's like a very complex kind of feedback mechanism. But here we have a new actor, which is a buyer, and they are happy to supply or pay you more because they have potential upside. So this is very, very great as a trade for both of the buyer and seller. We get more, they get optionality on the upside or downside. This is a very, very good match. And yeah, so I think the other trades, the other markets seems to be fine. So we can forget about this and then maybe look at it next week. But yeah, I'd say at this point, is my face frozen? I think so. Can you hear me well?
I can hear you, yeah, but you're frozen.
Okay, so again, I'll technical difficulties. I'll hand off. This is great. Thanks very much, Rosalie. So we'll hopefully the intern will follow what you're saying, and yeah, let's go with Brendan while I try to fix my camera. And yeah, Brendan, are you there? This is Options Hour. We talk about the markets.
Yes. Welcome. Thanks for being here, Rosalie. And
actually,
yeah,
why don't you guys chat a little bit? I'll try to rejoin because I don't know what's going on with my camera.
Sounds good. Well, this is Options Hour.
Sounds good.
We just got to see Rosalie and the intern and start trading and hopefully stop those losses here. So we'll check out the Bitcoin dominance chart here. But before we do that, yeah, how was your beach going over the Memorial weekend?
It was nice. Yeah, it was good. It was sunny. It was very fun. Played in the sand. Did you do anything fun? I know you were traveling,
Yes,
right?
I
So
was I went to Hawaii and was also enjoying the beaches there. So the water was very warm. Yeah, very mellow waves this time of year, kind of off season. So really nice time to be there.
great, great.
And welcome
Right.
back, Guillaume
I'm back.
Lambert.
Yes.
Sweet, looking sharp as ever. So, yeah, let's jump to the Bitcoin dominance charts. We'll cover a couple of things in the markets and just what's going on with options. So,
Amazing.
as you mentioned, we have this big drop in Bitcoin dominance from about 65. Well, I guess these are different metrics, but big drop in Bitcoin dominance uh, when the ETH wells came in and swam away with the price there. But I did want to zoom out a little bit.
Yeah,
Just
exactly. I was
showing.
gonna say it seems like early this year was still like 50-50, but yeah, it's been a very, very bullish time for Bitcoin for sure.
Very much so. Bitcoin's the talk of the town. If you look back, even back to August, so we're looking at the black part now. So this is kind of averaged out. The way they do this is a slightly different formula, but they're looking at the market cap dominance with 76.5% dominance being kind of the baseline. So the 0 point here is on average if Bitcoin has 76.5% dominance. So even from a year ago, we've started at around that baseline to something much higher, about 13 percentage points higher by that metric. Looking back as of last month, so we're slightly lower than this month.
Are you exposed to
But
Bitcoin yourself, Brendan? Or
yes, I have all the majors. Just kind of the I guess the index, I guess, for crypto trading.
yeah,
So
and a lot of folks also can do it on their brokerage firm. The IBIT ETF and also all the ETFs certainly helps. And yeah, be interested to see the on-chain activity, how if it has I mean wrap BTC exists, but yeah, if the fact that it's quite easy to take exposure to Bitcoin now means that people are less willing to trade on chain, but yeah.
yeah, I mean, even myself. So I don't know if I represent the majority of people, but it's exchanges are now much easier than getting air gap devices and cold storage and all these things. But of course, we've seen recent hacks with the data in Coinbase.
Oh my god, I don't
So
know if
always,
it's related to this. I'm getting so many spam phone calls. I'm not a whale by any means on Coinbase. I don't think they want to target me, but it's like definitely an uptick over the past 2 weeks on the spam and the shady emails and Telegram chats and stuff.
yeah, I mean, you got to be careful these days. All the news has been with the very scary cases going on with the in New York. I think there was a former Grin, I don't know, co-founder. If you remember this chain privacy blockchain or token called Grin back in the days, and this person was found to be torturing their co-founder in the
Oh,
in the New York City townhome that he lived in. So yeah, this is coming off the bat of the France failed kidnapping of the crypto exchange founders' kids, I think. So lots of, I'm sure we'll see a big documentary about this coming out because it's
yeah.
all
No,
over.
it's definitely. I mean, the beauty is that it's self custody, but also that's the biggest risks. So that's why some people stay on or actually very, very careful and keep everything in cold storage so that that's right. You cannot the whatever the wrench attack. You can get someone's password if you're yeah um, demanding with enough arguments. But yeah.
Yeah, I mean, we have seen people shift out of the non mode. I feel like that's my general sentiment is more projects have been launching that have basically been doxed, but we're seeing an uptick in these.
Yeah, I think that this is just going to be it's growing pains. The same way that it's easy to find a piece of paper with the seed phrase, and you can see that everyone's. You have a hardware wallet. Now you have maybe a multi-sig account abstraction. There's a way to recover the account. So I feel like the this is also going to be where we look at this 10 years from now and realize how like difficult it was. I don't know if you were around, but before MetaMask, like 2015, 16, 17, you had to go on. Where have you ever interacted with mycrypto.com
I have not.
or my Ether wallet? My Ether wallet back then.
Yes, Mew. Yeah.
Yeah, so the it was so weird. It's you can do this now, but it's on Tenderly, and they make it so that it's only nerds like ourselves that have to interact with the ABI and kind of input the fields manually. But yeah, it was such a bad UX. People were the MetaMask. I think MetaMask came out. It was great, but no hardware wallet support. So a lot of folks had to do it sign off on off chain. I guess air gapped. Yeah, we've gone a long way, and the wallets now are fantastic. But I'd say yeah, the last one is the key management and recovery aspect.
Mhm. Yeah, a lot of innovation there with social kind of key sharing and splitting across things. You know, you mentioned multi-sig. If you need to kidnap someone, you'd have to kidnap their whole family on the multi-sig.
Yeah.
So hopefully we see some good improvements there. But yes, with all-time highs comes people looking after doing some devious deeds here to get into people's Bitcoin accounts. I'm sure we'll hear about the lost hard drive in the trash bin going back to try to find his Bitcoin again. But yeah, we're seeing massive highs in Bitcoin dominance and price. Let's jump to the options data. So just looking at options volume, of course, Bitcoin options vastly dwarf ETH options as far as the crypto exchanges go. So I think this is just looking at Deribit, OKX, Delta Exchange. It's not looking at IBIT, for example. But we're seeing about nearly $42 billion in open interest, which is an all-time high. So I'm going to jump to this other chart here on Deribit. So this is just Deribit's open interest has reached an all-time high in their entire history of Bitcoin options. So as you see from this chart, they reached around 35.
Wait, was there a drop like January 1st? So like if you move. Oh no, okay, it happened a few days before. Interesting. I mean, it's good for Coinbase. Again, Coinbase is now the proud owner of the biggest options platform or options exchange, and yeah, all-time highs. Definitely like the iBits of the world, and even like the CME has options on Bitcoin. Like this is still where most crypto native users trade. So yeah, it's good to see. Definitely on the all-time high.
Yeah, I guess Coinbase does get to claim this if the deal has gone through, but I'm sure it will be shortly. So if it hasn't already. So yeah, great to see huge pickup in interest. Of course, we did see that fall after December, kind of with coinciding with the lesser interest and also just lower volumes, lower open interest, lower prices in Bitcoin, and then with that big recovery relief rally, and we're seeing a huge, immense interest in options trading. So we'll jump back to kind of dive more into this. So one of the strikes, let's look at the strike data actually. Sorry, we'll go here. So this topic kind of came up in the news is the 300,000 strike price. Big, nice round number, about 3 times higher than the current price of Bitcoin right now, trading at 107,254. This has been a very popular call option strike. People are calling it the lottery ticket buy for Bitcoin. And this particular, I think, on the July expiration. So just in 2 months
What?
from now.
I was going to ask you about the expiry, but yeah, the short time and how much value there is, 800 million.
So yeah, combined across timescales, this is 837 million dollars of notional value, which of course isn't as high as the at the money ones, but seeing some significantly out of the money interest here. I was just curious. This is kind of different from 0DTE. because they're looking more like 2 months out, but they're buying these really far out strikes. Is the idea actually a lottery ticket and hoping the price crosses this 300,000 line? Or is it more like if the price, goes up from now till then, there's some added benefit of trading this through an option? Do you have any ideas?
The way this works is that at expiry, if it's below 300,000, you lose all of your premium. If it's above, you make kind of the one-to-one profit. But yes, before that time, you do have some deltas, meaning that it's going to track the price. So this is a leveraged bet. I would imagine the delta to be like 1 or 2. So 1% move, $1 move means you make 1 cent. So that could be a way to still get exposure. Allow this to, even if it goes to 150K in a few weeks, you can make money. As the more you approach the expiry of July, the less likely it is that you'll be able to double dip this theta decay. But yeah, I would say that it's a like GameStop style meme. I'd say that people want to see the upside. There is some feedback loop that happens because the seller now has to maybe hedge. They have to cover their positions. They may be stuck and have to buy it. You have this kind of gamma squeeze, which would precipitate the price upwards. I doubt there's enough liquidity on Derbit to drive the price, but that could be another way that you make the prediction come true, because you buy so much of it, people have to hedge, and it pushes the price up. But yeah, I would say I'm surprised it's such short. I thought it was end of year, which may be a bit more realistic. But yes, the short datedness means that it's very much like a casino, and definitely low probability of profit, potentially high returns. But I would say they probably spend like, I don't know, could be 50K worth of premium on this because it's so large. But then it's a bet. You can lose it. You assume it's lost, and then if everything the stars line, you make a lot of money. Yeah,
very
interesting. Against the end of year trade at 300K.
Let's check. So at the 1 month expiry, the premium costs are about $21 currently at the ask. And then if we go, I think we can check the end of year. So December, going down here, yeah, and we're looking closer to about almost $600 per contract here.
Yeah, $600 per Bitcoin at $300,000. So it's like fraction of a percent of cost. This is your 100x leverage on Bitcoin. You pay, I don't know, 0.5%, even less. And then you hope that it goes. That's the strike of 300K is pretty far off, but if it does happen, it could be a very good investment. Yeah, there's not that much open interest yet at that end of year. So yeah,
it's bet here that Trump is going to buy up all our Bitcoin and maybe confiscate it like FDR, or is the U.S. dollar going to be devalued so far from this spiraling debt spiral? I saw you comment on Twitter about how this isn't happening anytime soon. Did you want to talk a little bit about?
This is maybe not, but the way that an asset price goes up is either the value of this asset or stock is increasing. So it could be Nvidia, immense bull run. They do have a lot of good things going for them. Or if it's you're in a country that I think Turkey was one of those examples where Bitcoin reached all-time highs and it's still going up because currency is going down. So the numerator is going down or the denominator is going up. So there's the hedge. It's not just about Bitcoin outperforming, but maybe betting on USDC being devalued. And that's the same bet. It's a way buying a call would be kind of that upside on the asset or downside on the quote. So yes, if USDC gets devalued, same thing with like the Balaji trade of $1 million per Bitcoin. It's not because Bitcoin was going to get a 100x improvement in technology or value, but rather the US dollar was going to be devalued. So inflation, whatever you want to call it, causes these assets price to go up because they have some kind of staying power. So yeah, if you are extremely bullish Bitcoin, I don't know if there's a 3x improvement in technology. Maybe the best way to look at it is that they are anticipating a much, much, much worse outcome, which is all of the US dollars being valued much less.
Yes, I think very much so. We're seeing gold spike at all-time highs as well. Some people thinking it'll outperform Bitcoin, but a lot of interest in these non-US instruments. So coming off the heels of the Moody's, I'm not sure if you discussed the Moody's rating about a week and a half ago, downgrading the US debt, coming off the heels of other credit rating agencies. So obviously not like a huge change for the actual market structure, because all investors that could have invested in treasuries continue to be eligible to invest in treasuries still with this downgrade.
I mean, I don't know if you saw
downgrade.
there was a bond auction, not drama, but I don't know if the way this works, that yes, the US can raise funds, they do treasuries, they issue them. It used to be very easy to buy them. Everyone from China and all other countries also would participate in these auctions. It was kind of standard of the mill. All right, we set the rates at 5%. They all get bought at that price, and that's it. This was for the past 2 or 3 decades. Very, very straightforward. But yeah, the one bond auction we had following that downgrade, or maybe around that time, was not filled at the price that the U.S. Treasury was wanting. So the price that was executed was a higher interest rate than the treasuries. And this is something that used to happen all the time in the 80s and 90s. And now we've seen this happen, which is the market now dictates the rates a little bit more than the Fed or like Jerome Powell. So that's another one that shows the bond traders, the world more or less kind of also acts on that downgrade. So it's not just yes, it's downgraded, but the US still says rates. No, now the world has spoken. They want a richer premium because of that downgrade, which is kind of weird on their mind.
Yeah, increased risk. So investors are demanding higher premium. That's very interesting. So
I mean, basically, no one wanted to buy at 5%, and then you in an auction you increase someone until someone fills it, and yeah, the market finds the best risk reward ratio there.
Yeah. Wow. Well, coming off the bats of the House bill that passed the big beautiful bill, going to the Senate, I think lots of markets are spooked by the increased, let's say, poor management of the deficits, with the tax cuts exceeding the spending cuts, let's say. So yeah, lots of bad news in the bond markets, and mortgage rates are still going to be high because they follow these bond markets.
Well, yeah, you're a recent homeowner too, but yeah, we wanted to refinance. We bought our house last year, but it hasn't been it hadn't gone down. So maybe we'll look at our rates and feel like it's a low one, because yeah.
Yes, that's right. So we're seeing, I think last I checked, we ticked up to 6.8% on the national average. Was it Fannie Mae, Freddie Mac, 30-year fixed rate mortgages? So still quite high. And with this current news, I think we're seeing rates are likely projected to stay high or go up higher. We can jump to Polymarket, but I think a couple months ago, the betting markets were pricing in 2 rate cuts from the Fed. Whether or not that would actually impact much in the bond markets or even mortgage rates. But now the markets are much more pessimistic, pricing closer to around what other markets were pricing, which is around 2 rate cuts near the end of the year. But of course, this is kind of already priced in. So even when the Fed does drop these rates, it doesn't tend to affect much. It's more of just the expectations. If we're surprised going forward, if suddenly the Fed cuts in the June meeting, that's where we'd see a big impact, right? But the likelihood of that is, I think, 1% on Polymarket. So yeah, not too much going forward with the rates, probably held steady.
And again, I think the Fed dictates the rate, but the market is the one that prices them. So to some extent, they may start playing catch up too. If it looks like the market values the effective interest rate higher, then yeah, they'll have to follow. Otherwise, they will look back every time there's a bond auction.
Yeah. I guess, how does that work? Because the Fed is giving an overnight rate to other banks? Is that the
Yeah,
So it's at an
exactly. So
extremely low rate, but everyone else is getting a very high rate. Yeah.
yeah, so it's kind of built. Yeah, it's the 10 year whatever the notes and the bonds and the treasury. It's all like downstream of that one rate that the Fed kind of sets. But yeah, it is kind of the driver. So it's a floor more or less. So even if you say yeah, the interest rate is 5%, like you cannot get any other structure below that type of way.
Hmm. Oh, that's a good way to think about it. Yeah, you can't get lower. Okay, well, let's jump finally to one last chart before we wrap up the options hour. We're going to look at just the volatility that's going on both Deribit, but also on Panoptic. So looking at both the Bitcoin and ETH volatilities. So we have, actually, I like this one a little bit more. The HV is the historical volatility, so kind of the realized volatility. And the DVOL is the Deribit volatility, implied volatility index. So black here is implied, red here is realized. We're seeing Bitcoin volatility, seeing a huge relief, a big drop in the last week, and coinciding with rising Bitcoin prices, while the IV has stayed constant. So we're seeing a positive V variance risk premium. Whereas with Ethereum, we're kind of seeing the opposite, with realized volatility spiking up high and staying high, and implied volatility actually being relatively constant
Interesting.
but lower.
And the realized is what's the value of the realized volatility? It seems pretty high, 289.
Yes, or in the high 80s for ETH, whereas Bitcoin in the dropping down to the 40s.
So I see this often, but yeah, the realized volatility and the implied volatilities are two different numbers, and they can diverge, and it looks like they are almost ever in agreement. But yeah, the IV being lower for ETH, I don't know if that's because maybe Deribit doesn't have a lot of options trading, so it seems to be very stable. But yeah, it's definitely a different environment. When realized is higher than I implied, you trade differently than if it's lower or the same. So yeah, very interesting. So yeah, the same thing with the IV on Bitcoin being higher is what you typically expect, and yeah, in that case, that's kind of the what the market's telling you as well.
Sweet. Well, let's also take a quick look at the perpetual options markets. I think we're seeing similar numbers, a little bit lower on the Uniswap V3 markets. We're seeing about 64% on this ETH USDC pool, and for the Bitcoin ones, we're seeing around 40% from this WRAP Bitcoin USDC pool, but sort of in line with what we're seeing there on Deribit, a bit higher IVs in ETH. Based on this IV-RV comparison, is there any advice you have
Yeah,
going
that's right. I'd
forward?
say the current IV that we show, 40% for Bitcoin and 64% for Ethereum. This is basically the realized volatility in a way. So yeah, I know it's confusing, but this is the fees that LPs get, and the LPs that are providing equity on Uniswap, it's realized. One trade, one fraction of a fee goes to you. So that IV is kind of inverting what the realized returns are for that one day. How much of that would be in terms of IV if you were to price this option now? So that's, I would say also 40% IV should be compared to the realized volatility on Bitcoin. Same thing with 64 on ETH, the realized on ETH. And what we see as IV in Panoptic is that extra spread multiplier, like the one trade we did with Rosalie as well, had 15% more return. So the IV is higher than that. So the signal as well, if you were to trade, is the IV is what you get, but then you could still within that realm tap into a higher return by going to the strikes, which have a higher multiplier. So yeah, I would also agree that the Bitcoin volatility is kind of repressed and a bit less, so I wouldn't be selling too much, or at least being so on buying or creating spreads, because what we've seen is that when there's a quiet period, then there's a floor of IV that you cannot exceed. But if you're quiet for a while, you can only go higher. So there's kind of a way to prepare for that. So yeah, some of these strikes, 17%, for instance. So on the sell side, you would earn more than the realized, and this is kind of how that spread can be visualized as well.
Yeah, I think what you're getting at here is the difference between perpetual options and regular options. The premium is streamed over time, and so this is where your fees are being realized over time. So normally IV is a leading indicator based on the prices of the options, whereas the RV is the lagging indicator based on what has actually been realized of with the price over time. So I think you're saying that the IV metric that we show here on the markets is a perpetual option IV, which is more of a lagging indicator, whereas the leading indicator for perpetual options might be more like the actual spread term that you're getting. For example, here you'd be paying about 17% more higher prices than normal. So could you translate that to also like if the IV perpetual option IV is 40% on ETH, then this would be 40% times 17.
No, that's right. So this is the relationship between your so fees is what you get in terms of premium. So in Black-Scholes or whatnot, it's the number side. The formula has the theta, the delta. So it's not 70% more IV, it's 70% more in fees, but you have to kind of scale this by the Vega, I guess. So it is a little bit non-linear. And now that I think of it, I actually don't have a good back of the envelope like intuition for it. So maybe I'll do some numbers. But yeah, it's 70% more on the fees is likely more than 70% more on the IV in a way. But yeah, I can look into it.
Interesting. Would love to explore that more. So stay tuned. We do research episodes here every week on Tuesday. So we'll have one next Tuesday. Friday, we'll have our best and worst trades analysis on the trading. So we don't have a trading competition going on right now, but actually I'll announce it now. We're going to start one next month. So stay tuned for that. It'll be a base trading contest. Well, with Bitcoin markets popping, you can probably guess which market will host this trading contest on. So stay tuned for more details. We'll have prizes like last time we gave out $5,000 in USDC that has been sent out to the winners. So if you are watching this and did participate in the trading competition that ended last week, you should have received your prizes. We gave prizes out to the top 50, including over 5 million points and a gigantic plushie. So we'll have some new and exciting prizes this time for the next competition that we'll announce. So stay tuned for that. We also have a live stream with Tasty Crypto coming up. Do you want to talk a little bit about the details for that?
Oh yeah, sure. So Tasty Crypto is Tasty Trade is a TradFi brokerage firm. They do some content. I mean, I'm not hiding it. I like what they do, so we try to do a similar thing here with the Options Hour Trading Show. We've been in touch. We like them. Tasty Trade, Tasty Crypto. We had even their founder Tom Sosnoff during our Panopticon event at Denver. I'm gonna be live at 5:30 p.m. Eastern time, talking about crypto options insights with Dan there from the Tasty Crypto team. Very excited about this as well. So we'll likely compare, and this is a good topic, but the IV on IBIT, which is very liquid and accessible to a lot of users, compare that with the IV on on-chain options like Panoptic, which is a different way of calculating it, but that has some inefficiencies. So I don't think that Tasty Crypto or Tasty Trade users can trade on Panoptic easily, but it's just to show that the relevance of having, maybe there's two markets, but there's trades that you can do to equilibrate maybe, or have an arbitrage exist between the two IVs. But yeah,
very
excited about this. Yeah.
So how do you watch it? Is it going to be on X?
I think they have this on their own Tasty Live show. They have a website which they host. It's on YouTube as well, but you can also watch it from their Tasty Live website. There's a live stream, so I'll try to tweet it as well. But yeah, there's a no, yeah, the I don't know if it's the if you go to tastylive.com, you can see the live show now. It's probably the easiest way to get it.
Okay, sweet. And it's with Tasty Live or Tasty Crypto?
So tastylive.com will host the Tasty Crypto show.
Okay.
on the Tasty Trade Network. Very tasty. Yes.
Yes, lots of taste there. So catch that tonight then if you're in the US time zone. Otherwise, there'll be morning or you might be asleep Asia time, but I'm sure there'll be usually some recording there. So
Yeah.
check it out. And follow us, Panoptic_XYZ here for all the updates, and you'll be able to find all the links there and to our upcoming trading competition announcements. So anything else? Any advice or general news you want?
No, I think that's it. Thanks a lot, everyone. Yeah, this was fun, and yeah, I'll see you also, Brennan, for the best trade of the week on Friday, but also Rosalie. We'll see if Intern does these trades. But yeah, thanks a lot, and have a good one.
Have a good week.